Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. I don't have my tripod with me, so if I'm a little bit shaky, bear with me, okay? I don't have my flowery notebook. I have a little Best Western notepad here to go over figures with you. I don't have any cheap vodka, and I don't have any Pall Malls, and so I'm suffering, and Gag is over in the corner pouting because she doesn't have her cheap vodka and Pall Malls, okay? But we're gonna make do. Maybe we'll have to pick some up a little bit later. We got to find a joint that still sells Pall Malls. All right. I want to go over with you how long it's going to take for you to double your money in Ulti and how long it would take for you to get paid back from Ulti. There's two different figures, okay? Two different ways of investing. We've got one way that's the way I'm investing, and we got one way that somebody who's already retired is investing. We are getting a little bit of boost on Ulti due to AppLovin getting included in the S&P 500. Robinhood was included in the S&P 500. That's good for us. So on Friday and today, we're looking pretty good. I don't have my little flowery notebook. I told you that. So I got to get home and look at my figures. Okay, but I think it's possible I might be in the green on Ulti today overall. Okay. More so in one account than the other accounts, spread across the accounts. I don't know. Take taxes into consideration. Maybe I'm not in the green. Who knows? I think I'm pretty dadgum close. All right. And so I'm pretty happy about that. These figures that I'm going to share with you are a pipe dream. Okay. They're just assuming a static 84.48% distribution rate like Ulti has right now, a static price that Ulti just stays the same price this whole year. That's not going to happen, okay? Could be better, could be worse, all right? If the NAV continues to erode, it's going to be worse. If the NAV goes down and then comes back up, it might be a little bit better because then you bought more shares at a lower price. If the distribution rate goes down, not so good. If the distribution rate goes up, then it's going to be a shorter period of time. We are coming into the fall. Okay, September, there could be an October surprise. We don't want one of those. September's kind of a rough month a lot of times, but it's looking good for us so far, right? At least I think it is because I wasn't in the green on Ulti, and now I think I am. I had a video out called The Ulti Charts Are Worthless. I told you I thought they were worthless when it comes to trying to pick price points, trying to pick resistance and support levels. I don't think they're useful because they've got a mosaic of stocks that they trade in and out of. That I did say that I thought that the charts might be helpful if you were looking to see if a strategy was effective. Lately, the strategy hasn't been that great. We've been suffering a little bit. I have mentioned that I like the protective puts. I like the idea of the protective puts. It keeps us from losing a lot overnight. But overall, are they costing us more than they're gaining us? Maybe so. It would take an accountant to figure that out. I'm not an accountant. I don't have that I don't sit there and have all the figures and spreadsheets and everything. I'm not as good at that as a lot of other people. So I'll leave the accounting to people that are doing accounting. Maybe the fund managers could say whether or not it's been effective, and maybe they'll change their strategy. If they find a more profitable strategy, I hope they do change it. That's why we're paying them. That's why we pay them the 1.3%. Soon to be 1.4% because we are on a 0.1% waiver on management fees. You can see that on the Yield Max website. Is the distribution rate going to stay the same? Well, if the NAV continues to go down, the distribution rate will not stay the same. They can't pay a 9-cent distribution on a 50-cent per share stock. Of course, I don't think it would ever be 50 cents because if it got that low, I think they would do a reverse split. Now, I think it was Jay from Yield Max said that a reverse split is not in the cards for Ulti. I think that that's wishful thinking, all right? If the NAV continues to go down, I don't see them closing up the fund. It earns them a lot of management fees. So I feel like if it got too low for too long, they would do a reverse split. Then your distribution amount would go up, but the rate wouldn't necessarily go up, right? Because just because you do like a 10-for-1 reverse split, now all of a sudden you have a 10 times bigger distribution, but it's not a 10 times bigger distribution rate. Okay, it's just a 10 times bigger distribution because you're getting 10 shares of distribution out of 1 share of Ulti. There are different ways that you could utilize Ulti. You could be reinvesting your dividends. That's what I'm doing, okay? I am not living off of the income right now, so I am just reinvesting. You could be taking all of the income and putting it in something else or using it to live on. You could be doing what I would recommend to a friend of mine, not to you because I'm not a financial advisor, but if I was just talking with a friend, I might say, hey, you should, even if you're going to live off the income from Ulti, you should probably be reinvesting some in Ulti or somewhere else in order to keep your NAV, your principal value that you started out with. Because if you just use all the income and the NAV keeps going down, you're going to run out of money, and then you're going to be like a Walmart greeter, and you're going to be like, well, I probably should have protected my NAV or principal balance, however you want to look at that. And you could accomplish that with reinvesting in Ulti, assuming that it performs well, or putting it into an index fund, or putting it into a high yield savings account if you don't want any more money in the market, or whatever it is you want to do. How will the rate cuts affect Ulti? Well, if we get a rate cut, I think that people and funds will move from risk off to risk on assets, okay? If you are getting a high yield in treasuries, in CDs, whatever, you're less likely to take that money and put it into something riskier like the stock market. So I think that would be good for the stock market. Now, it is not the only factor. We still have jobs, we still have inflation, so you could still have a stock market that underperforms even if we get a rate cut, or it could be lagging. Do I want a rate cut? No, I don't want a rate cut because I think that we're still battling inflation. I think that we pay too much at the pump, we pay too much at the grocery store, we're paying too much in rent or mortgage, whatever you want to call it. We are paying too much for houses. Housing is too expensive. That's because we've got this perpetual bubble that is engineered by the Fed and by the government to keep house prices inflated. That is not helpful for younger generations, okay? Even if you and I can afford a house, it doesn't necessarily mean that everybody can afford a house. So I think house prices need a correction. I actually think the stock market needs a correction. We are in an everything bubble. I still have dry powder sitting on the sidelines waiting for a downturn. Now, if you are older and you are retired already, maybe you don't want to see the stock market go down because that's what you're living off of. But for those of us that are still planning on investing more in the future, or we have more money to invest right now, a correction in the stock market would not be a bad thing. Instead of buying at these inflated levels, we might be able to get a little better entry, and entries are where your money is made for the most part. So I actually don't want to see a rate cut. Now, even if we have a rate cut, that doesn't mean that we're in good economic times. A lot of times rate cuts come too late. Then things can have a downturn before they move back up. But generally speaking, a rate cut is good for the stock market. It creates cheaper money so companies can borrow more. People move out of less risky investments to more risky investments, i.e. the stock market, and so that will push prices up. Companies will be buying back their own stocks because they have cheap money, and so that is helpful for the stock market. So if we do get a rate cut, I would expect that these higher volatility, higher risk stocks that Ulti is investing in would benefit from that in general. That doesn't mean that the ones that they choose will. The choice of stocks to invest in is still very important. And so if they're picking stocks that are in downtrends, that maybe the rate cut doesn't save them. But let's go over our numbers here. I know it's very interesting to think about how long until you're playing with house money, or how long till you double your money. Okay, so at an 84.48% distribution rate, if you reinvest in Ulti, and Ulti stays the same price and the distribution rate stays the same, remember these are all static figures, it's less than a year to double your money. It's only 43 weeks. We should be so lucky. That would be an incredible rate of return. So if we could double our money in 43 weeks, I mean, I don't know of another investment that has that opportunity other than individual stocks. Now, is that going to happen for Ulti? Well, not if it continues to perform the way it has the last couple months. But if it performs the way it did since its change, right? It started out kind of high, dipped down low, went back up, now it's down lower again. If it continues to ride that wave, but it stays in a channel, then I would say that that is possible. I'm not going to go as far as to say that it's likely, but if you could double your money in 43 weeks, that would be phenomenal. And then you would have a huge cushion for Ulti to move around without beating you up too bad. Let's say you take all of the money out in your distributions. If you take all the money out in your distributions, it's obviously going to take you longer to get all of your money back because you're not earning distributions on subsequent shares that you bought with your dividend reinvestments. That would only take you 62 weeks. So if Ulti stays the same price and if the distribution stays the same, essentially you've gotten all of your money back out in 62 weeks, and then that is what we would call playing with house money. If that were the case and you were able to do that and you still had 100% of your principal value in there earning you that gigantic distribution, that would be magnificent. So I did a video about Ulti charts being worthless because Ulti holds a mosaic of stocks. And because they trade in and out of them, I don't think you can find support levels or resistance levels that matter in Ulti. If Ulti was being traded as a closed-end fund and they weren't constantly creating new shares and destroying old shares, depending on how much inflows they had on a daily basis, then I would say that we could start, you could still use those levels potentially as support and resistance, because then there is a psychological effect that can drive Ulti's price. But because Ulti's market value is in large part determined by the NAV of its underlyings, when those underlyings are constantly changing, I don't think the chart is as helpful. However, I also mentioned that I think if you want to see whether or not the fund manager strategy is working, that would be a reason to look at the charts. And I would look at the chart for the NAV, and then I would also look at the chart for the total return, because there are two components there. If you plan on taking out all of the money, then the NAV might be very important to you. For me, the NAV is not near as important as the total return. If the NAV is slowly eroding, but the total return is still 50%, well, that's pretty dadgum good to me, all right? So you just have to look at everything from your own perspective. If you're gonna make the bet, you gotta do the vet. And so you look at it from your perspective. Is a declining NAV something that you can accept? Is a total return that is better than average something that you could accept? For me, total return is what's important to me right now because I am not taking the income off of it. I am looking at how long it takes to double my money, best case scenario, because I am reinvesting the dividends. I do not show a loss right now in my mind because I think Ulti got up to the price for my average price, including all of my reinvestments. Okay, so my brokerage still shows me a loss because it shows a loss on each of those distributions. I take those into account, and so I do my own figuring. And I think right now I might be a penny in the green. Now, I'm not an accountant, so taxes, whatever. I'd have to figure that out later. But I'm hoping that from here on out, I'm sure there's going to be weeks where the distribution rate is smaller than the NAV decline, but I hope in general that the NAV does not decline more than the distribution for that week, so that I can stay in the green and hopefully get more in the green. And we'll see. There's a lot of people that say that, with a fund like this, it's time in the market, not timing the market. And that old adage is true in large part for a lot of investments. However, if it's going to continuously decline faster than your distributions pay out, then time in the market would just add up to mounting losses. So the fund still needs to perform. You can't just hold it forever and expect to make a profit if it's just declining every single week by more than what you're making. But let's see. Hopefully we have good weeks that wipe out the bad weeks, and we can stay in some sort of a channel where I would like Ulti to stay, so that I can continue to accumulate more shares and more income. And then maybe by the time Dividend Daddy is ready to retire, I've got a fat income that I can start drawing off of and playing with that house money, so to speak. I'll talk to you degens later.